Start taking a look now at paper 1 from 2023, beginning with section A, the multiple choice questions. Please remember how to do them properly. Colour it in to select the answer you want. If you then think maybe you've made a mistake, put a cross through it. If you then think, well, actually that was right after all, put a circle around it. If you're still not sure, probably give up and move on would be my advice at that point. Right, let's have a look through these then, which are not to be underestimated. So which stakeholder will not find the schedule of non-current assets useful? So debenture holders, they probably will. They want to know what's happened to the money they've given to the company. Existing shareholders, they will find it quite useful. Local community, not quite sure what they would do with the information, but potential investors would want to know what the company are investing in. So I would say the answer for that one is C, the local community. Okay, question 2. Which of the following is an example of an error of principle? So remember, an error of principle is where something's in completely the wrong place. So machinery repairs posted to the machinery cost account. So repairs is an expense. The machinery at cost is an asset. So I would say that is definitely the correct answer, A. Let's just look at these though and see what type of errors they are. So an invoice for machinery repairs posted to rent and rates, that's an error of commission or mispost. It's in the right area, but the wrong specific account. These are both expenses, so not a complete disaster. A sales invoice not recorded in the sales journal, well, that's an error of omission, where something's been missed out. So D, a sales invoice posted to the debit of sales and the credit of the bank account. Well, that's reversal, and we won't get into the fact it shouldn't even be the bank account anyway. If it's a sales invoice, it should be debit trade receivables and credit the sales account. Right, let's look at question 3. Which items would be included on the debit side of a purchase ledger control account? So remember, with the purchase ledger control account, the opening balance is on the credit side, and anything that makes the balance we owe bigger will also be on the credit side. So things like purchase invoices, interest charged by suppliers, that kind of thing. Anything on the debit side is going to be things that reduce the amount we owe to the suppliers. So it would be things like, what would it be? Discounts received, payments to suppliers, contra entries, that kind of thing. So contra entries, discounts allowed, that's not wrong. Sorry. So contra entry is right, discounts allowed is wrong, and interest charged is also wrong. It would be on the other side. Discounts allowed wouldn't be in the purchase ledger control account, it'd be on the sales ledger control account. Contra entry is right, discounts received is right, and purchase returns. Those are all things that reduce the amount we owe to the supplier. So the answer there is B. Now let's just go through these for completeness. Discounts allowed, remember, is sales ledger, not purchase ledger. Payments to suppliers is okay. Yep, that will reduce the amount we owe them. And purchase returns, so 2 out of 3. And then for D, discounts received, that's okay. Interest charge, though, is wrong because that would be on the credit side. It would increase the amount we owe. And purchase returns is okay. So the answer is definitely B. Which of the following is an example of capital income? So capital income is things that don't affect the income statement. So capital introduced, issue of shares, money received from that, loans that have been increased, selling of non-current assets. So commission received is revenue income, so it's definitely not that one. A credit note received for cancellation of a maintenance contract, definitely not. Credit sales, no, that's definitely revenue. We even call it sales revenue. But the trade-in value of machinery used in part exchange, that is an example of capital income. Even though there's no money, we're still going to use those sale proceeds towards the cost of a new machine. So the answer for number 4 is D. Well, let's look at number 5 then. Which is the correct formula for the calculation of interest cover? So remember, this is how many times we can afford to pay our interest from our profit before interest and tax, i.e. our profit from operations. So it's profit before interest and tax on the top divided by the interest payable. It's most definitely that one. It's not any of these. They're all very similar. I'm not going to go through them now. Number 6, which book of prime entry will be used to record a cheque received from a previously written off irrecoverable debt? Well, never mind about what the receipt is for. A cheque received is going to have to be paid straight into the cash book. So the answer is A. Okay. Number 7. A sole trader has prepared her income statement for the year ended 31st of March 2023, which showed a profit for the year of £35,000. 360. However, it was discovered that interest received up to 250 had been debited to the interest paid account. So what should have been treated as income, I'm going to need our calculator for this one, has actually been treated as an expense. Now remember, if something is on the wrong side, we've got a reversal of entries, then we're going to end up twice that amount out. So 2 lots of 250, I probably shouldn't need my calculator for that, means that profit is actually going to increase by £4,500. So the answer is going to be 39,860 for the corrected profit, which is D. Number 8, Marge has provided the following information for the year ended 31st of January 2023. There's been a dishonoured cheque, presumably from a customer. She's got receipts from trade receivables, and she's got opening and closing trade receivables. Make sure we get those round the right way. What is the value of credit sales for the year ended 31st of January 2023? Well, what I'd be doing here is a little sales ledger or trade receivables control account. Remember, the balance brought down is on the debit side. The balance brought down is at the 1st of February 2022, 6330. Credit sales is the missing figure here. We don't know what that is. It's whatever we need to make the sales ledger control account balance. The dishonoured cheque, though, that comes back in on the debit side. So remember, when a customer dishonours a cheque, it's going to be a payment on our bank account. So it'll be a credit on the cash book and a debit to the sales ledger control account and that customer's account. So the dishonoured cheque is going to go in on the debit side, 145. So that's that one and that one. Receipts from trade receivables, we're going to debit bank and credit the sales ledger control account. It's going to reduce the amount the customers owe. And then trade receivables carried down at the end, 6870. So the missing figure is whatever we need to force these two sides to agree. So this side adds up to 64,970. If we take away 6330 and 145, that means our missing credit sales figure is 58,495, and that will make both sides add up to 64,970. So hopefully that answer is there somewhere, 58,495. So the answer for number 8 is C. Okay, we're getting there. 2 more to go. Right, number 9. The motor vehicles provision for sorry, can't see that, can you? Motor vehicles provision for depreciation account for the year ended 31st of December 2022 contains the entries as follows. We've got a balance brought down, a balance carried down, and a depreciation charge for the year. Now remember, the provision for depreciation is the one that goes on the statement of financial position, and it's the one that contains all of the depreciation to date. So it's a credit balance, so that's going to be on the credit side brought forward. So if we do the T account here, this is what the provision for depreciation account would look like. So the balance brought down is £40,512. We're going to make a charge to the income statement of 7,922, and the balance carried down at the end of the year was 22,293. Now it tells us that on the 31st of October 2022, a motor vehicle was sold. There were no other additions or disposals of motor vehicles during the year. What entry will be made in the motor vehicles provision for depreciation account, this one, to record the depreciation on the motor vehicle sold? Well, that's going to be the missing figure. So whatever the depreciation on that vehicle that's sold, it's contained in there at the moment. So our missing entry is going to be over on this side. So all we've got to do is make this account balance up. So if we add those two together, we get 48,434 on that side, and we need to make both sides equal. So the missing figure is 26,141, and that's going to go off to the disposal account, and that will be met with the original cost of the vehicle, and then we'll be able to match it up with the sale proceeds to calculate the profit or loss on disposal. But just for at the moment, we need a debit balance, or debit entry there, of 26,141. So the answer is D. And then we have one more question, because we always have 10 of these multiple choice questions in section A. So we've got something to do with the provision for doubtful debts. We just had the provision for depreciation. So the provision for doubtful debts account is 5,942 at the 1st of February. So that's the amount that had been provided in the previous year. It's still in the pot, ready for this year. And our trade receivables at the 31st of January were 148,700. A provision for doubtful debts of 3% is required at the end of the year. So it's 3% of that 148,700. Always make sure that there are no irrecoverable debts, actual irrecoverable debts to write off first, but it doesn't tell us anything about those. So we just need 3% of that, which is 4,461. Now we've already got 5,942 in the pot, so we need to reduce the provision by 1,481. So this is a credit balance. We'll be debiting that 1,481 to the provision account, which will go on the statement of financial position, be deducted from those trade receivables, and we're going to credit the income statement. So the income statement entry is going to be other income. The answer is B, of 1,481. Okay, thanks very much for watching. That's the multiple choice questions done. I'll do the rest of section A in a separate video.